All right, welcome to the Financial Literacy Club with Mr. Alonzo. So recently, growth stocks have been getting hit. They have been getting hammered. If you own companies like Tesla, if you own companies in the NASDAQ, if you own companies or ETFs like ARRK, you will notice that they have crashed. All right. So today what we're going to do is we're going to talk about specifically Tesla and what do you do when a stock crashes. Okay. So I'm going to go very deeply into Tesla. And I think this is a very good opportunity to buy growth companies on sale. Okay. So I'm going to explain my Tesla thesis and how I am invested into Tesla. I choose to invest in Tesla through the ETF ARRK. So I'm going to explain my thought process there. And basically, what should you do? And I think this is going to be a really good example of how I look at a company and how I invest, right? Okay. So, so the agenda for today is a brief overview of Tesla. So whenever you invest, you always want to know what your company does, right? What kind of services and why do you think they're going to grow? And I'm going to go over my bull thesis. So, are, if you know the lingo of the stock market, bull means you think it's going to go up. So why I think it's a good buy. And a bear is if you think it's going to, so if I said a bear case, that means I think it's going to go down. But in this case, I'm going to share you my bull case thesis, right? And then I'm also going to share a valuation and a price target for the stock. So not everybody does this on YouTube. I've noticed that because they get, I think the reason that they do this is for hate comments. Where do you think this is going to stop? Oh, it went down. And so I'm going to share you guys what I think this company is worth and how I come to that justification. So I think this video is going to be very, very valuable. And then I'm also going to share some mindset strategies. So I am, whenever, for example, I own a lot of ARK. So when I saw that drop a lot, there are certain strategies that help us stay grounded in to that long-term mindset, because most people do not think in the long term. If you can think in the long term, you have a huge advantage against analysts. You have a huge advantage against people that are scared, because it is your money and it is scary when your stock goes down. So I'm going to share what I do when there is a lot of volatility, like right now. So that long-term mindset helps me stay sane during the volatility. And you can actually use volatility to your advantage. So that is the whole point of today, is the Tesla example. If you wanted to own Tesla, how do you stay sane during this volatility? And basically it comes to, are you a speculator in the stock? Are you just buying and selling and not really knowing where it's going to go? And or are you an investor? Are you buying and holding forever? And are you researching? Are you doing a deep dive analysis on the company? And there's, you can make money both ways, but the type of mindset that I have, I have a job. I am a teacher, right? I don't have time to be in front of the screen trading up and down for because I have been burned, and 90% of traders lose money. So I like to have a long-term mindset. That is my style, long-term mindset. I like to envision the future. I like to learn about science and technology. And so this is the perfect kind of stock and situation for me. I like to envision what my life is going to be like in 10 years or 15 years or 5 years. And once again, this is not financial advice. If you enjoy this content, please like and subscribe. All right, let's move on. The bull thesis. So this year, Tesla did amazing. It started out at like down here. Down here, it was like, so let's do a pointer. Down here, it was like 50 to $100. And now the Tesla shares are selling at around 600, 650. It got all the way up to $900. We noticed that I created these 50-day moving average, the 50-day moving average, and I think this is the 200-day moving average. So these moving averages help us see where different support levels are for the stock. So right here, it is either, I forgot what it was, but there is a moving average right there that is supporting the stock there. But it could fall if it breaks that support down to about $400. And if it falls down to that much, you can believe that I will be buying heavily there. I will be selling other things and um, and buying more and more Tesla there. So first, my main points that I'm going to cover in this. So that was kind of like an overview of what happened this last year with this Tesla stock. But the bull case long term, why I think it's still a great buy, is basically these. This is my these are my conviction points on this stock. So solar, wind, battery prices will continue to fall, making green energy far cheaper than fossil fuels. Many people do not believe this. So many people do not have that conviction. If you believe something that very little people believe and you are correct, you are able to make a lot of money in the stock market. So many people do not think that, oh, they think solar is too expensive, this, that. Solar and wind are the cheapest form of electricity right now. We are in the renewable, and it's not for environmental reasons. It is just cheaper to create. Um, it is way cheaper to create energy with solar and wind. Um, and in the future, I think Tesla will become more of an energy and battery company than a car company. So right now, they most of their revenue, most of their profits come from selling cars, but I think their battery technology is going to be far better. Their solar is going to be far better, and that's going to come into play in the next 5 to 10 years. And they're going to be able to sell the power walls that they have. They're already doing this, but it's just going to be more and more different energy companies that are like We Energies in Wisconsin, but different energy companies are going to want to buy their batteries to power all of our homes. And that is an amazing opportunity for Tesla. Also, I believe electric car vehicles are the future. They are far superior for many reasons than internal combustion engines. And it will become far, far cheaper to buy an electric vehicle. That is not the case today by very slim margin. So right now it is cheaper because of the maintenance costs and the gas costs, but they will continue. Then the sticker price will like how much you pay for the car will come down even below um, internal combustion engine. So that is a year, maybe 2 years away. Um, and then I think autonomous driving is a huge opportunity for this company and a huge catalyst for this company. If they can make cars drive themselves, um, this is this stock is going to go crazy. All right. And right now, people are not valuing this right now. So they are putting a zero valuation. And most of the valuation metrics that I have too is also a zero because you can't prove it. You don't know when it's going to come out, but we know that they have more data and they have more. They are a leader in this space, right? All right. So first, So these are the basic main topics that I'm going to go through today. And I'm going to share with you guys all of the research that I've done over the past 2 years. And just recently, there has been a lot of really amazing breakthroughs. Okay. So, why I think electric cars are, first of all, you have to believe, if you're an investor in Tesla, you have to believe that electric cars are the future. So, um, couple of really important information. It is 4 times cheaper to fill up to charge your car than fill up in gas. So that is one, it's way cheaper. It's also, I actually have it's a plug-in hybrid. It's a Ford. It's actually way more convenient than going to the gas station. So a lot of people think, oh my God, what if they have range anxiety, and they're like, what if I get stuck without charging? There's gas stations everywhere. That's actually not the case. If you own a garage, it is far more convenient to charge. All you have to do is click, and you never have to go to a gas station again. So many people in the United States have garages. So, and many people that are buying Teslas right now are more wealthy, right? Because a lot of their cars are 40, 50, $60,000. They haven't come out with that $25,000 car yet, but they will soon. So I see that as way more convenient. And I always think people are lazy and they're going to go for the more convenient option. So also, you don't have to worry about oil changes. Not many people realize this or think about this. And they don't have a lot of moving parts. So there's a lot of parts in internal combustion engines, transmission, this, that. Many things can break, right? I don't know a lot about cars, but I know that when my car breaks, it is annoying, right? The battery can go out, this, blah, blah, blah. And anytime that I have to go to a mechanic is money that, and it's a terrible experience. I have to get stuck on the street. I have to, right, go and find a mechanic that will probably charge me a ton of money to fix because I don't know anything about cars. And I think a lot of people are in very similar shoes like me. As, um, if you love cars, yeah, you can fix it yourself and do it cheaply. But there's a lot of people that don't know anything about cars. And those types of people will want an electric car because don't, they are way more reliable. Um, and they're going to be cheaper in about 2 years. So you're going to pay less for gas, pay less for maintenance, and pay less for the sticker price. Okay, this is so a lot of people are money motivated. And then we don't have data to prove this yet, but it stands to show that each car is going to last way longer. So some people have driven Teslas 400,000 miles, 500,000 miles, and they are still good to go. There are rumors that Tesla is going to come out with a 1,000,000-mile battery on the same battery. So a lot of people don't know this. What car for $35,000 or $40,000 can last you 3 times longer than a regular car? It's going to be a no-brainer to switch. And also because Teslas look so much cooler than, like, I don't know, a Camry or a Honda or, a cheap entry car, they retain their value much longer and they last way longer. So when I go out and let's say I have to spend $40,000, it's kind of like in the cell phone industry where you buy an Apple iPhone or an Android. Part of that Apple premium, yeah, a lot of people are Apple sheep and, whatever, and they'll pay whatever for that phone. But a part of that premium um, is that they last longer, right? So Tesla cars have that premium. So all of these things, all of these brand things that Tesla has is very valuable. Okay. And also Teslas are more fun to drive than normal cars. more acceleration. If we go to their website, right, these are beautiful cars. Here you have the Model S. Here you have the Model 3. Here you have the Model X with the, I think they call them Falcon windows. And I think the one that's going to be very, very sell really well in the US is the Model Y, which is a little bit bigger than the Model 3. And we see that they're all um, we see that they look beautiful. They're getting cheaper and cheaper. And we see Tesla also going into solar roofing. So, like I said, it's going to be cheaper and cheaper to put solar on your house. And then, so this is the Tesla roof that is going to come out. And then they already have solar panels. Okay, so this is going to be very, very important to put all of these things together and all this technology together. Okay. Um, let's see. Do they have data on? Yeah, here we go. 0 to 60 in 1.9 seconds for the Model S. The Model 3, do they tell us? 0 to 60 in 3.1 seconds. That is unreal. That is the whole part that is more fun to drive. Okay. Um, all right. So I talked a little bit about the autonomous opportunity. So in about, I don't think they already are rolling out what they call full self-driving. They're already in beta testing. So what Tesla does is they put like 5 or 6 cameras into all of their vehicles so that they collect data over the years. So what other companies do with autonomous driving is they have a bunch of complicated sensors. I don't know if you've seen Waymo and Google, their sensors and LiDAR and map and all of this complicated stuff. What Tesla does is they just have cameras. And I think that is a huge competitive advantage. And they are just collecting the data. Every time you take a turn in your steering wheel, every time you put on the brake, every time you accelerate, Tesla gets to collect that data. And they're going to use that data very, very intelligently. They're going to use that data for insurance because they're already rolling out with insurance. They're going to use that data to make their autonomous software much, much better. So one, Tesla has the most data, real life data of people driving their cars, um, and they have data about everything that you do in the car. They have the best computer scientists in the world. They Elon Musk also owns SpaceX. They have the best material scientists in the world. They put a satellite, right? They put a rocket into space and landed it. So they, right? Elon Musk wants to colonize Mars. That takes science and technology. If they are the leaders in science and technology, all of their new products are going to be the best in their field. Okay. So Tesla soon will release a subscription model. If you want your car to drive you places, for example, if you don't want to have to pay as much attention on the freeway or whatever, and it is far safer, all right, you can pay for that subscription. Okay. And in a couple of years, if if they do crack this autonomous opportunity, when I go to work, I can say, hey, car, drive all these, become an Uber, go off on your own and drive other people. And that asset is going to generate what Tesla says is around $30,000 a year. So when they come out with a car with full autonomous driving, where you don't even need a driver, it can go pick up people and drive them and generate income for the owner. Now, how much would you pay for an asset that generates $30,000 a year? It's going to be a no-brainer that these prices are going to increase if they are able to do that. So at $30,000 a year, I buy $100,000 car. In 4 years, I made back my money. and I have a super cool car. Okay. So like that's why a lot of people buy real estate, right? Some people buy real estate and then they rent out their house, right? That generates $12,000 a year. Let's say they rent out a 1 bedroom or a 2 bedroom house for $2,000. They generate like 12,000. Some people pay 150, $200,000 for a house. If they are able to crack this, they are going to be able to make a car for around maybe $20,000 and sell it for $200,000. That opportunity is huge. This opportunity will make Tesla, if they are the first to do this, the biggest company in the world. All right. So that I want to stress that it's it's maybe 5 years away, 4 years away with all the regulation and everything like that. But if they are able to crack this price is crazy undervalued. All right. I also want to share you guys this. This is Dave Lee. He is one of my favorite. He basically owns an investing YouTube channel. So if you guys let's see, I will put I will put the link of this presentation in the chat. And if you just look up Dave Lee, you will see a bunch of I think he has almost all of his wealth in Tesla. So he talks about Tesla a lot. So I want to give you guys basically all of the resources that I came across, right? All right. Another amazing resource is Solving the Money Problem. So he is so blunt. So let me go to his page.
Went down by 46%.
So I'm just going to go here. So this is Solving the Money Problem. Is this Australian guy? He has about $2 million worth. He buys Tesla every week, every month. And he basically made the entire channel about Tesla. And he is hilarious. Yeah, definitely check him out. And he put this great video about one of my other bull cases was that renewable energy is going to go down. So right now he posted this video that's called The Future of Energy. The future of energy is huge. And so this opportunity is huge for Tesla. So I put the link in the presentation because this is where I got all of my information for this part. Okay. So solar and wind energy have already become the cheapest form of electricity. So, and these are the charts that he showed in the video. You notice that down here, so wind and solar are much cheaper than coal, much cheaper than natural gas, and much cheaper than, and I think nuclear is the bottom one here. Okay, so it is cheaper than any other form of electricity and will continue to get cheaper. So in the last 10 years, the price of wind went down 46%. In the next 10 years, they will go down 43%. So this is huge. They will half again. So wind and solar already put the coal industry out of business. They're not coming back. So all of those people that lost their jobs in the coal plants, they are not coming back. Luckily, there are way more jobs to be made putting in solar panels and putting in wind energy. So here's the solar costs. In the last 10 years, they went down 82%. So 82%. And in the next 10 years, they are projecting for it to go down again, a 72% decrease. If it becomes this cheap, it's already cheaper than anything else. But if it continues to go down in price, why would any company invest in any other type of electricity? So what my point is here, the key point, therefore, at some point, all new investments will go into wind, solar, and battery technology. All of them. This will put in the next maybe 10, 20, 30 years, I think it will put companies like Exxon, Chevron out of business, right? Why would you invest? If they're already running, sure, keep them. But why would you make new things? Why would you keep drilling if this is the case? Okay. And this is with no subsidies, zero subsidies. Okay. Battery costs. So this is way more important for Tesla because the most expensive part of a car is going to be the battery. So right now on the Model 3, it costs $12,000 to put all of the batteries in the Model 3. So if that goes down another 80%, what is that? 12,000 times 0.2. That price is going to go down to 2,400. So it's going to cost Tesla $2,000 to put a battery into in the next 10 years, right? To put all of the batteries in the Model 3. Okay. So they're going to be able to lower the price. They're going to be able to lower the price about $10,000 in the next 10 years. So if they're already selling this car, this Model 3 for $35,000 without any like extra things, right? It kind of comes out to like 40 or 42. They're able to lower that price for $10,000. So now you are talking about a brand new car. They are able to sell that brand new car at around $25,000. Okay, just because of the battery technology, that's going to increase just because of batteries. All right. So if this battery decline keeps happening, I don't know if most people realize this, but the largest companies by revenue in the world are large energy companies. So if we go to Wikipedia, right, list of largest companies by revenue, you see Walmart is number one, and that's a retail company. But then you have state governments, right? Here you have the state government of China buying electricity grid. What do you think they're going to buy if coal is unprofitable, if natural gas is unprofitable, if all of this is, what do you think they're going to buy, and who are they going to buy it from? If Tesla is making the best batteries in the world, these companies are going to be buying Tesla. Okay, here's oil and gas. Notice that their revenues are going down, right? Oil and gas, that's going to go out of business. This is going to go out of business. That's going to go out of business. All of those companies are going to have to shift to batteries because it makes common sense for them to do so. Right? So oil and gas here, BP, they're going to have to buy, and they're going to have to buy batteries and solar and all that if they want to stay competitive. So that is going to disrupt all of those companies. Here's some more oil and gas. These are like the largest companies in the world. They are going to have to invest in either battery technology, solar technology. They're going to have to give you a different way if they want to survive. If they want to survive. All right. So this is a huge, if you added up all of that revenue, I don't know, let's see, there's $500,000, and this is like a $5 trillion opportunity if you add up all of those. All right. So whenever you want to value a stock, this is another one of my favorite YouTubers. He is a PhD in accounting, right? He is a professor in accounting. His name is Sven Karlim, and I watched literally all of his videos. And what he does is really good, really great. So I'm posting that link in that presentation. But there is an intrinsic value calculator. So I'm going to move on to how I value Tesla. How do I think? Why do I think if it's a buy? Because yeah, Tesla can be a really great company, but if a lot of people are willing to pay a lot of money for those shares, it can be overvalued, right? So there, it can be very hyped, and then it's going to crash. Because so it's very important that um, we use some kind of valuation calculator in the cash flows of the business. So whenever we value a company, whenever you buy shares of a company, you are buying ownership of the company. And whenever that company makes money, the cash flow of the company, and let's make this even more specific, the free cash flow of the company every single quarter, they're going to pay you, the investor, part of it. And that is how the stock price increases. If we don't have this free cash flow, or it is unprofitable, then we can't really value it and say that it's a good buy. So what I think is really important, I use this um, intrinsic value calculator, and I put this into, and if you click on that link, you're going to get, first you're going to get this table. It's going to bring you to this table, and he has analyzed all of these companies. So if there are other companies that you like, you can go and click what he thinks. So what I did is I clicked on Tesla for this video, and what I did was, let's get rid of this. There we go. All right. So what I did is I went to Morningstar. So here we go. If we go to Morningstar, and then you get the free cash flow of 2020. So that's where I got that. So we noticed that it is, the free cash flow is about 2.7. I rounded up because this latest quarter, it's even better than 2.7. So I rounded up to 2.8. So that is what I'm going to put onto that spreadsheet. And also the past 3 years, they've been growing at about 38%. But these coming years, I think they're going to grow much higher. So it is much harder to start from zero and go to 500,000 vehicles than it is from going from 500,000 vehicles to 20 million vehicles, like I think they're going to do in the 10, 20 years to come, right? So because they have a working formula, now they are coming out, now they have factories, more and more factories all over the world. In the beginning, it was just one factory at Fremont. Now they have a Chinese factory. Now they're going to build one in Austin, Texas. And they're going to build a battery factory they call it Giga Berlin for Europe. So they're going to create in the next 10 years or 15 years, I don't know, 12 or so big gigafactories to power the world's batteries and solar panels and all of that stuff. So if these 3-year growth is this year, I think they're going to grow about 50% in the future. Okay. On the last conference call, so another thing that I do is I listen to the conference calls of companies that I like. So you can always go to their company's website and listen to the conference calls and read those. And Elon Musk said that his the deliveries of vehicles, he thinks. So this is his words. Deliveries are going to be 50% per year. Okay. So that is very, very important. So with that information from Morningstar and what I learned from the conference calls of Tesla, I can put those values into this spreadsheet. So like I said, I use 2.8. And then I think what this free cash flow table does is you create 3 different scenarios. So you have a normal case scenario, you have a best case scenario, and you have a worst case scenario. So then you can think, because everything in life is a probability, right? Tomorrow, Tesla could, it's unlikely, but there is a probability that Tesla won't be able to sell cars, right? Or whatever. So everything in life is a probability. I don't know if Tesla is going to grow at 50%. No one knows. The future is uncertain. So what we can do is we can guess different probabilities of growth of Tesla, and we can put in different values of what we think Tesla's growth is going to be in the future. And then that's going to spit out a price for us. Okay. So I put that 2.8 from the Morningstar. I put 50% growth. Like I said, the revenue growth was around 38 the last few years. So I think the future is going to be even better. So for the next 5 years, is going to be 50% growth, I think. But then it's really hard. The bigger you get as a company, the harder it is to grow as a company. So I think there is plenty of room to grow, but you always want to put the 5 to 10 years less than these, because the further out you go, the more uncertain you become. Okay. So you always want to put less growth. So I put 40. And this is like a normal case scenario. If you don't like these numbers, you can put different numbers. So you can change this to 30, and then it gives you a different value. Okay. This is going to be the best case scenario. So the best case, sometimes Elon Musk, he says 50%, but he really doesn't want people, you don't want to have expectations too high. So sometimes he has expectations that he comes under expectations, and sometimes he puts out crazy expectations, right? So I think the best case scenario, you're going, instead of growing at 50%, you're going to grow at 60%. So if you guys agree with me, you can change that. You can keep it at, so this would be if autonomous vehicles in the next 5 years go. If the autonomous vehicles and they drive themselves, you can believe that's even higher than 60 or 70%, right? But because that is still uncertain, I'm gonna put a really like a 60%, right, growth. And then once again, I'm putting that lower at the 5 to 10 years. From 1 to 5 is going to be high growth, because we all know that Tesla is doing really great right now. but I don't know if they're going to be able to keep that lead 5 years from now, right? So then we put the worst case scenario. The worst case scenario is that, let's say there's government issues, let's say there's more taxes, let's say there's more I don't know, we get a Republican president and they cut all of the subsidies, and I don't know, everyone goes and tries to attack Tesla, right? Then the growth rate might go lower than what's expected. So what I put is a 30% growth rate. Okay. And then from 5 to 10, we got a 20% growth rate. Okay. So that's the growth. This discount rate is the value. How much money do you want to make as an investor? Okay. The bigger the discount rate, the more conservative you're going to be. So all of these projections, like I said, I could be wrong and you could be wrong. But that discount rate helps us, even if we make a mistake, that discount rate takes away 10%. So that so if you want to be more conservative, we can change this discount rate, right, to 15, right? And that's going to change the value that if you want to make 15%, you have to buy Tesla at under $700. Okay. So I like putting 10% because the average of the stock market is 10%. So if I want to invest into a specific company, I put 10%. Just because if not, like, I could just buy the S&P 500 and it'll do like 8%, right? So I want to do a little bit better if I'm going to research specific companies. So I either put 10% or 15%, and I start there. So this kind of tells you how much money you are going to expect. So if you buy it under $1,000, or it average all three of those scenarios. So what it does is it takes, and this is the probability down here. So there is and you get to change these numbers. So what I did was I said there is a 50% probability. So I put 0.5. There is a 50% probability that this scenario is going to play out. There is a 30% probability that scenario is going to play out. And the worst case scenario is, I'm going to say there's a 20% probability. Now, if you disagree with me, like I said, you can change these values. If I change this to 4 and I can change this to 0.1, right? And those are the different probabilities, and that changes the value and the stock price that that it recommends that you buy it at. Okay. So if we look at this, and if we sum up all of those probabilities, as long as we are buying Tesla under $1,400, we are going to make 10% of our money. Now I like to change this to see what kind of return I'm going to get. Let's change this to 15. Now notice it went up, it went down, because now I'm going to be making 15%, right? But it's still under the stock price. So it seems like we need to buy Tesla under $900 a share, under $894, under $900 a share, to make 15% on our money. Right now, the stock price is around 650. It went up today like crazy, but I think it'll stay around. It's going to be around 650 today. It might go up to 700, might go down to 600, whatever. But right now, it's at 650. So it's a buy right now, as long as you want to make 15% your money. Now let's make that 20%. That's our 600. If you want to make 20% per year on your money, you got to buy it around $600. Okay. And like I said, right now it's 650. So it's pretty close to that. We can change this to, let's try to make this like um, exactly around 650 because that's the stock price today. That's 18%, 17%. Do like 16%. Oh no, that's going up. I need to go up. Yeah, around 19% is where how much money I think you're gonna make today per year for 10 years, right? If you buy the stock today. Like I said, this is a long-term thing. Don't put it in the comment like the stock's gonna go down in 2 months. Yeah, the stock could go down to 400, right? But if you buy it at 400, your long-term return is going to go way higher. So what is my current strategy? Why do I what is my current strategy? How do I own Tesla? I own Tesla through a company called ARRK Invest. And what ARRK does is it buys disruptive companies like Tesla. They buy technology companies. They are experts in this. So what I want to show you guys is my strategy, right? So my strategy through how do I buy Tesla is through the ARRK ETF. And an ETF is kind of like a basket of different stocks. And if you notice the ARRK, let's change the color. The ARRK ETF puts 10% of all of their money into Tesla. But with this ETF, I not only get things like I not only get Tesla, I get diversified with the leader in small payments, Square, companies like Roku that are leading the disruption. People would much rather buy a Roku now and the ad revenue on Roku than watching cable, right? So these are the kinds of things in the these are the kind of companies that ARRK buys. Baidu is like Google of China, right? So I'm diversified through all of this. All right. So how do I buy Tesla? I buy Tesla through ARRK. So I'm not spread. I don't have that risk of spreading myself too thin. Or buying one stock that is going to crash and I'm going to lose all my money. No, it's going to be different sectors. It's different. They also invest. So let's go to their webpage, ARRK.com. Oh, ARRK Invest. ARRK Holdings. Okay, so they have 5 different platforms. They have 5 different ETFs. Let's get rid of this. Why can I write but not clear everything? There we go. Okay, so they have 5 different ETFs. Let's go to their main website. So they have their biggest one is ARRK, so that's all of them. But they also focus on autonomous driving or autonomous like drones or autonomous robots. Like Amazon has robots, right, that go around their warehouse. So autonomous technology and robotics, different internet companies, and the genomic space I think is going to be huge. They study our DNA and all of those things. They study fintech, so that's financial technology. That's like Square and Venmo, right? Venmo, like PayPal, all of that stuff. So they are a company that buys all of those types of companies. So why do I like this? Um, when you buy ARRK, or you can subscribe for their email list. So I can see every single day what trades they make. I get an email every single day, and they have webinars. They have all of this different information that I can learn about different technologies that are coming, and about the future. What I also like to do is ticker symbol U. He creates these amazing videos about um, about basically only future technologies and ARK Invest. So definitely subscribe to his channel. Right here, you can see all of the different videos. The Kathy Wood is basically the CEO and the fund manager. So you can see that this is a really important asset. This ticker symbol U is awesome. So my strategy is to buy Tesla through ARK. I bought a long-term call option on ARK. So it is a long-term call. If you don't know what calls are, I can explain that um, in another video. But I have a long-term call option on ARK. Um, on my Robinhood account. I also sell short-term calls monthly for income. And what this does is when it comes down, when the stock comes down, the short-term calls, when I sell those, I'm able to move that down, and it creates income every single month. Um, and another strategy that I have is I have weekly deposits um, in my Roth IRA in the M1 finance account. So I'm always dollar cost averaging as long as when it goes down. And I like to stay up to date. So if you guys can see, this is my Robinhood account. Here you can see the ARK call, right? Call option 2 years out. So what that means is I can buy 100 shares of ARK no matter what price at $117. Um, so no matter what price that's at, in 2 years I can buy it at $117. Um, so then that's how I do that. And then here you can see the when I sell the calls up here. So every month you can go over here, trade options, and you can go 3 weeks out or 4 weeks out, and you can say, okay, I want to sell this call, and like this generates $500 a month. Okay, so the higher you go, the safer it's going to be, but then you get less premium. Okay, so that is what I do. I get income. So if it goes down, I am protected. I can get more and more income, and if it goes up, my call option increases in value. So that is just so that I stay sane of the volatility. And then I have my M1 finance account. What I really like about M1 finance is that it rebalances. Oh my goodness. I really like about M1 finance is that it rebalances. So you can create a portfolio that rebalances. If this would ever open, maybe I already have. this again. There it is. Okay. So, like I said, I have all of the different ETFs here. And 10% of, I think, 3 of these are 10% of those are Tesla. So that is how I'm invested through Tesla. And recently, all of these growth companies have been going down, but Berkshire Hathaway is invested in value companies, what they term value companies. So this is all growth. And the beauty of this is I have half of this portfolio is in value plays. I don't really like these terms, but that's what they're called, is in value plays. So when value does well, Berkshire Hathaway does well because this that's going to increase. And when growth does well, like this last year, ARRK is going to increase and they're going to offset each other. So what this does is it automatically, every single time I deposit money, it puts whichever one it went up or down. So it puts 35% in Berkshire, 20% in ARRK, and then it rebalances accordingly. So if Berkshire goes down, the next $100 or on the week, because I try to put $100 a week into here. If Berkshire goes down and ARK goes up, it's going to put those $100, more of those $100 into Berkshire. But if the opposite is true, it's going to put, like this week, ARK went down a lot. And these last couple of weeks, ARK went down a lot. So the new $100 that I put in every week is going to go into ARK. So it's going to rebalance around what the cheaper price is compared to the other assets. And then this one, I also have real estate because I believe in real estate. Like everyone needs a place to live, right? So I buy, I own real estate long term. So this is my portfolio. Those are my that's basically my strategy. So I dollar cost average down when the stock goes down. I do short-term calls when, or short-term, I sell calls for income so I don't panic, right? So I have income coming in so that I can always keep reinvesting. And then I have a long-term call that way. So thank you so much. I appreciate the support. So help build this channel with a like and subscribe if you like the content. Share any questions in the comments below or any feedback. So yeah, I appreciate all of you. Love you all.